So I did schedule a stream, and I think I've started the wrong thing, but we'll see soon enough. We are live now, I believe. Let's pull it up and see what is there. Destination tab. Or maybe the schedule has worked. If so, it's starting now. See soon enough. Cool. Yeah, we are live. Awesome. And we have a few people. Andy, first one to comment. Hey, hot on the money, Andy. All right, let me just pull this up so I can see the comments. Mute myself. Awesome. So I think quite a few people know Mark already, but I am joined with Mark tonight. Very fortunate for us. I know Mark is a super busy man, and that hasn't changed in the probably 2 years that I've known Mark. I think we met probably back in probably would have been Lincoln. I think the first time probably was about a couple years ago. That I don't know. It's hard with all this COVID stuff. You lose track of it. I think probably was about 2 years ago. Just
it was either in Lincoln or in London. I can't remember which one came first now because it seemed that long ago.
Awesome. Yeah, we've met a couple of times. In person. And Mark is the owner of a specialized e-commerce accounting firm, or maybe he'll describe it differently. I'll pass over to Mark, and he can give us a quick introduction about himself. So over to you, Mark.
Yeah. Okay. So thanks, Luke. So I own a company called Passive Tax. Basically, we're Amazon VAT and tax specialists. We're accountants, and we also that's what we do mainly. So 95% of our client base is Amazon sellers, and the other 5% is made up of other e-commerce, so eBay, Shopify, Etsy, etc., etc. So yeah, it's pretty much our niche, and it's what we've been doing for the last 4 years. So yeah, we're Amazon specialist accountants.
Sorry, still have myself on mute there.
Okay.
Awesome. Trying to get the links to those people who had asked for them at the same time as well.
Okay.
Cool. So the format for tonight is pretty much going to be Q&A. I did ask ahead of time if anyone had any questions. Weren't many, so I've noted a few sort of topics / questions to cover. But if anyone does have any live questions, feel free to ask those in the chat, and we will cover as many as we can in the hour that we do have. So hey to Andy, Ash, and Arminder in the chat. If you are here watching, drop a comment, hit that like, and it just pushes it out to more people. And I think tonight's going to be super valuable for those who do tune in. So to get started, jump straight into it. I think the first sort of thing go through sort of chronologically is big question is, when do you get an accountant? So we're going to try and focus on Amazon and sort of arbitrage wholesale in particular. When do people get an accountant, Mark?
Okay, so I mean, when people approach us and they're just starting, we kind of say to them, look, you don't need an accountant straight away. And if somebody tells you that they do, then all you're going to do is you're going to pay for that service if it's subscription based. And that'll take the cash flow away that you're starting with from you regenerating that. Because everybody knows in the world of Amazon, you start off with £100 and then you turn that into 120, then you turn it into 150. So if you're paying out straight away for accountancy services, you're going to slow your growth down and how much you're churning your money. So we always advise people, look, you don't need an accountant straight away on full services because, like I say, you've got to keep churning that money over. But what we do and what we offer is a retainer service. So people can pay us a small nominal amount each month, and then they get access to our team. They make sure that they get set up on the right softwares. They can ask us for advice. So you've kind of got the use of an accountancy firm that can make sure that you're starting off right, but you're not using your starting capital to pay for fees that you don't need to start off with. So what I always say to people as well is get on the retainer plan to start off with, keep churning it over. When you get to £2,000, £3,000 turnover a month, then start talking to the accountant to say, look, I'm now doing this kind of money per month. I'd like to go on a full plan, and that's about the right time to go on a full plan with an accountant.
Awesome. Yeah, I think that leads on quite nicely to the next topic that I had is what to do when starting a business. So you talked about cash flow there, from what I understand. You talked about the idea of, well, my understanding is, you're going to have to pay, if you're a limited company, you're going to have to pay for your accounts being prepared, and that might be traced back, and you're going to pay those fees. But rather than paying a monthly, you can, compound that cash. You can have your cash flow benefit by not going with an accountant straight away on a full monthly plan. You can have a retainer with yourself at Passive Tax or another accountant, whoever you want to go with. And then, I don't know if other accountants offer that service, but you can, with yourselves, you offer that retainer there, and then you're benefiting yourself by having that cash available to source stock. And then when the time comes that you do need those accounting services, you can go for that then. So first of all, is that kind of, have I summarized that correctly?
It does, yeah, summarise it perfectly. And basically what it does is, when you're starting out, it gives you a better chance to make it successful, because you've not got money tied up in expenses that you don't need, because you need that money to be turning over. You need that money to be learning. So in the early days, if you make a few bad buys, which most people will do in the early days, and you've got a lot of expenses going out, it's going to demoralise you quite quickly. So you need as much cash flow as you've got available at the beginning, just to learn how the whole world of Amazon works. That's why we encourage not employing us right from the beginning on full plans.
Awesome. And so linking on to that, the next sort of topic and question that I've noted down here is, well, what do you do when you're starting a business? So what I mean by that is, I'll talk about from my experience. One mistake I did is I applied for a business bank account, had a bunch of pain there. I was really keen to get going. So I just went, okay, I'll just buy some stuff with my personal card. Didn't really keep a log of things properly, and that's caused not only issues in other areas, but issues especially from a sort of bookkeeping and accounting point of view. So that's one example I would give, as not mixing personal and business. But is there anything else, particularly from accounting point of view, that people should be looking to do when they're getting set up and then sort of on an ongoing basis?
Yeah, I mean, right from the beginning, we know it's difficult. It's kind of like fall into it, and you're down at Smith's Toys buying something as a present, and you end up buying 3 or 4 of them, and you decide to sell them, and you put them on one card, etc. But if you know that this is the path that you want to take, and you want to build an arbitrage business, and you want to come into the world of Amazon, if you can get one bank account set up, or use one bank account that you don't use for anything else, even if it's a personal account, and then instead of buying on this card and that card, and then borrowing your granny's card and stuff like that, if you can transfer money to that one bank account in a lump sum, and then do all your purchases and all your expenses going out that one bank account, it's going to make it a lot easier, because then the money that you've put in can then be identified, rather than you spending across different bank accounts. So try right from the beginning just to get everything under one bank account on one card. Now, we know it's not always possible. And we know, like I say, some people will just fall into arbitrage. But as soon as you know that you're going to continue this, then just try and get it separated out. Don't go 6 months, 7 months, just using cards all over and just spending money everywhere and transferring little bits and bobs here and everywhere, because it does become a minefield on trying to track the money when we do come to finalize your accounts.
Yeah, I think just from a clarity point of view as well, if you've got money going everywhere, you don't necessarily know like what the sort of performance is. Whereas if you know you've put X amount into that business and everything is going in and out of that bank account, you can get a much better idea of how it's actually sort of performing, really. And I think as well, like a couple of things there from my experience would be things like, keeping a good record of things. Like if you are going and driving out and about, there's apps for the sort of mileage calculation, things like that. I think in general, it's those things where it's those small decisions that don't really make much of an impact as like a one-off. But if you continue to do it and you put off those things, like if you put off just setting up a new bank account quickly and transferring over your subscriptions. I know, for example, the one thing I've done in this iGen entrepreneur business, as I've gone from sole trader to limited company, is I literally just looked at my bank statement for the previous bank that we were using. And I've just gone through all of those expenses and I've gone, okay, here's one that I need to transfer over. And I've gone and set that up. Takes a bit of time, but it's one of those that when you get it done, the sooner you get it done, the more benefit you're going to have in the long run. So I think it's just things like that, really.
Yeah, exactly. Because you don't want to spend 20 hours a week trying to find out where all the money and track all your money and find out what's gone where, when you can use that time sourcing, building your business and learning your business. So the sooner you can get the money side of the business sorted out, obviously the better it's going to be for yourself. And like you say, coming back to the point of just knowing exactly where you are and whether you're actually making any money or not. If you've got money flying all over, it's harder to actually work out whether you're profitable.
Yeah, exactly. Just back to the comments. D says evening all. Good evening, D. Andy had a question, so we'll jump to that before we go to prepared ones. Andy says about to register for VAT. Just line up all the paperwork. His brother is currently looking after Andy's accounts and reckons that Andy should go for the flat rate version. Is there a reason not to do that? Now, I can think of one, but I'm going to pass over to you because you're much more qualified in this area than myself.
Exactly. Yeah. I mean, we don't recommend people go straight onto the flat rate scheme for VAT to start off with. So because you don't know the metrics of your business, so we always recommend that people go onto the standard scheme when they start, and then we can look at what your VAT cost is. Now we see anything ranging between 5% and 9% on VAT, and if you're just toys based and everything's 20% based, and you're working on low margins, then the flat rate scheme probably wouldn't work out for you because you'd be on a lower VAT. So what happens is, because you're on the flat rate scheme, you tend to work on tighter margins rather than pushing for bigger margins, because you're seeing a saving in the flat rate scheme, and that's not always the best way to go. So we always recommend starting off on the 20% standard accrual based accounting. Work out what your percentages are. You might find that your percentage is down to 6% when you've calculated everything, your VAT cost, and then therefore you're better off on that standard rate. And then also it stops you, if you're on the flat rate scheme, it also stops you moving into the lucrative market of grocery, which most products within the grocery range are 0%, and it's a massive growing sector within Amazon. And anything you sell at 0%, in the world of Amazon, you're then declaring the flat rate scheme percentage at 7.5% after the first 12 months on VAT. So you're actually losing a part of your income when you don't need to.
No, really useful. And I think only other couple points I'd add there. I was kind of doing something while you're mentioning that, grabbing something, but I think, I'm not sure if you mentioned, or correct me if I'm wrong, but I believe there's 150K limit in turnover for flat rate as well, which I know a lot of people going VAT registered probably go over that. And then also I have put together a sort of VAT course for Amazon sellers. It's not hugely sort of from an accounting point of view. It's more based on actually what you should be doing as an Amazon seller, in my experience, to sort of in your business, just things like even getting your tax codes onto Amazon. Lots of people don't do that. Things like actually basics of VAT and things like 0% items that Mark mentioned there, which you're missing out. Well, you're missing out on the flat rate as well, and it's the only type of item you're going to be more competitive on than someone that isn't VAT registered there. Cool.
Yeah, so you just touched on PTCs there, which is product tax codes within Amazon. I just want to say to the viewers that that's a very important part of your listing. So you need to make sure that your PTCs are set correctly, to whatever it is. So if you're selling tea, you need to make sure you set it to tea. If you're selling coffee, you need to make sure you set it to coffee, because what will happen is, if you're selling to a B2B, so Amazon business customer that's VAT registered, and you're selling them tea and you've got it set to iGen standard, you're telling that buyer that you're actually charging them 20% VAT within your price of the tea bag. So then when you come to declare it, you then can't declare the sale at 0% because you've given somebody 20% of the VAT. So you're losing profit instantly because your PTCs aren't correct.
Yeah, exactly. It's huge, and as you sort of said there, not many people, at least people I speak to, it tends to be when people are getting VAT registered that, at least for me, like there wasn't a sort of much information out there, just these kind of lives, and super helpful. But that's kind of why I put together this mini course as I have, and I know Andy, you'll be registered on that already. But yeah, things like I didn't know about how to even get those tax codes on an efficient sort of way, but it's super important to do that, as Mark just mentioned there. And it's not showing up on Facebook for some reason, but I can see it in Be Live. I'm guessing it's Andy, who also said the random numbers seems pretty similar between both VAT schemes on the numbers, but then factor in the zero rate items. So yeah, that's a big one there. So thanks.
Yeah, that's definitely a big one, because
yeah,
if you go on the flat rate scheme, then it's going to limit you to look at the grocery items, because when you're VAT registered, if you're up against a seller that's non-VAT registered in toys, then they've got a better advantage than you because you've got a VAT cost. On the grocery, it's kind of a level playing field again because there's 0% VAT. But if you're flat rate registered, then you've uneven the playing field again for yourself to people that are not VAT registered and people that aren't on the 0% scheme, because you've got a VAT cost again.
Yeah, no, awesome. Cool. I want to move on to something quite recent, and that's sort of just general pointers in terms of the situation with Europe and effect of Brexit. So if we look at the sort of buying from Europe more so than selling, I think that affects more people. I think a lot of people have kind of just closed off their selling into Europe. If you look at the typical sort of arbitrage seller, most of those have just turned off the European fulfillment network, from what I've seen anyway. So we touch on first sort of buying from Europe. I mean, what do people need to know there if they're, say, looking at some store like I don't know, Easy Parapharmacy is it's one you see quite often, something like Cocoon Center. What do people need to take into account when they're buying from those sort of stores, bringing it into the UK to sell in the UK?
Well, there are limits where you don't need to declare any duty. So most people try and keep those purchases under the £135, so they don't have to declare any duty coming in. So you need to make sure that you can split your basket and that you're doing on that. And there's kind of no way around that because it's classed as a consignment. So you've just got to be careful on the limit that you're buying. But also with some of these French websites that people are buying off, sometimes they've got a UK, they might have a UK warehouse that it's being dispatched from. So you just need to take a look at the invoice, because sometimes you might find that it's got a UK VAT number on there. If you're VAT registered and it's got a UK VAT number on there, the chances are that they're going to charge you VAT. And that's okay if you're VAT registered, because you can claim that back. But if it's not got a UK VAT number on there and you can see a French VAT number, you should have supplied them your VAT number, and then they shouldn't charge you VAT on that invoice. They should reverse charge that.
Okay, cool. I think that might be a question. No, it's not. I thought it might be leading on. Okay, so if that's EU reverse charge mechanism, that's still the same then. Is that correct? So you still, if they're not providing you with a GB VAT number, they shouldn't be charging the VAT on that item if you're VAT registered and you provide them with your VAT number. Is that correct?
That's right. Yeah, they should automatically reverse charge that for you.
Awesome. And how about if it's over £135? I don't know if we might be going into a bit of a different realm from the accounting. So Is that something that people need to go and research, or is it something like it's not something we've looked at that much in our business? We've just kind of kept under the 135 really.
Yeah, definitely. I mean, we're not experts in importations and things like that, but obviously speak to a 3PL and find a 3PL that can deal with that for you, and then they'll handle the transfer of those goods from France and bring them into the UK for you, and then they'll handle the duty.
Awesome, cool. Sean Gilbert's tuned in. He says he's watching live from Tesco in Nottingham. Good old Sean on a RA trip as standard. I guess it's an RA trip.
Filling his van.
Yeah, Sean is a incredibly hard worker. Also at the meetup in Lincoln over a couple of years ago. Harminder has asked, when doing a VAT return, if we can't provide a invoice or receipt, does that mean we can't claim the transactions back? And I'm guessing he's referring to the VAT element on those transactions. Mentioned the VAT return.
Yeah, the short answer is you can, but we need to do certain things to ensure that you can claim that VAT back. So HMRC were challenged in court on the need for a VAT receipt when you want to claim VAT back, and it was found by the courts that you don't necessarily need one as long as you can prove the life cycle of that product. So effectively, what we're talking about is you're using the business account to purchase it with, so we can track the money. You've vetted your supplier, so it's not Bob's Hardware on the high street. It's Asda, Tesco's, Argos. They're going to be VAT registered, so you've vetted the supplier. They might have given you a delivery note. They might have given you a confirmation statement. They might have given you something, a piece of paper to say you've had the goods. Just keep that. And then we're going to be able to demonstrate that you've tracked those goods, so we can see them going into Amazon. So there's a shipping plan. So if you brought 6, don't keep one as a present for the kids and only send 5 in because you're getting yourself into trouble. Send the 6 in, and then we can see them going into Amazon. Then we'll be able to see them in Amazon, and we'll be able to see them be sold, and then we can calculate them back on a VAT return where you've declared the VAT on a sale. So we've got the whole cycle of that product, so you don't necessarily need a VAT receipt. Now, don't use this as your best practice. Your best practice should be to always get a VAT receipt when you can, and find out how you've got to ask for a VAT receipt, who's going to play hard to get a VAT receipt out of them, what you've got to do to get a VAT receipt. Like with some suppliers, you just take your normal till receipt to customer services, ask them for a VAT receipt, they'll print you one out on an A4 piece of paper. Other people, you've just got to email them and ask them to print off VAT receipts from your account, and you'll probably get a stack of them through the post. That's normally what Argos do. So you might get a full stack of like 300 or 400 print offs from Argos. So just find out the way you've got to do it to get yourself a VAT receipt.
Show you what I've just received from the Prep Centre.
Yeah. So just keep all of that just in case you don't have receipts and you get a compliance check from HMRC. Then you can dig that paperwork out and go, here's the delivery note, this is where it was paid, there's the shipping plan, there's the sale. So therefore, the HMRC will find it very hard to say, no, you can't claim the VAT.
Yeah, for sure. And I mean, the other option is just don't do retail arbitrage and deal with all those getting bad invoices. I still remember going into.
People start,
I'm only joking. I think everyone sort of does it when they're starting, and a lot of people continue to do it, and it's very fruitful. I mean, Sean makes a very good profit from it. I remember going into the likes of Asda, and half of them were like, what's a VAT invoice? And then just kind of sat there handwriting them out, and they're like, oh, give us an hour, and sort of went over to the cafe. Cafe was closed, so ended up just doing another sort of RA trip. But yeah, it's been a while. Since that, but yeah, not fun. I think if you can sort of comment on this if this is incorrect, but from my point of view in our business, and again, this is covered in the sort of VAT sort of mini course that I put together, which I'll show the comment on for anyone who does want to check it out. But on our business, my admin VA, we have a procedure where we're trying to chase up the VAT invoices, and at least we've got the our sort of motto is at least we've got the paper trail, or at least something. Like some stores we might, as Mark mentioned there, will have a delivery note. We'll have an email going off to that retailer requesting that invoice. And if they're just ignoring us or not doing it, then at least we've got that paper trail. So that's my sort of understanding there. And now this is maybe a bit more of a gray area where potentially we are wrong. We're happy to sort of say it is with the likes of Tesco. Tesco requests that you go into the store, even if you place an online order, they request that you go into the store to actually get a VAT invoice. Now, I'm not really willing to do that, just from a sort of time pain in the ass point of view. Now, that could be wrong, it probably is wrong, but that's what I sort of do. We do have a Tesco sort of VAT number. We do have requests from Tesco. I have been away from the country when I've done this, like literally not really possible unless someone else is doing it. So yeah, what are your thoughts on that, Mark? Am I putting myself in a bad position potentially? Do I need to head off to Tesco? What's the sort of, is a bit of a grey area there? What's the
well, obviously Tesco is going to be VAT registered, so you've vetted the supplier, and as long as you get all the other bits, so you get an order confirmation, you've got that delivery note going to your prep centre, you've got the money going out your bank, and then we can track it through Amazon again back to the sale, then you're going to be okay. And if that's how it works with Tesco for you and your business, then that's fine, do it for that one, but don't do it for everybody.
Right. Yeah, no, that's what we do. We make our sort of best reasonable effort to get a VAT invoice. I mean, I've got VAs who use Skype to ring stores to chase them up if they need to, but I draw the line actually going into the store myself and standing at the customer services. That's the end of the line for me. Cool, awesome. Hopefully that's really valuable for others. It is for myself. Very interesting. I just want to jump to the comments because there's been a couple questions there. So Angela has asked, when doing a VAT return, how do they account for returns and expired/faulty stock? I mean, my sort of answer is let the accountants deal with it, but I guess maybe providing them with that information is what maybe Angela's saying. But yeah, I kind of have a stock write-off sheet, which I then provide to the accountant. But yeah, what should we be doing for those VAT returns in terms of expired stock?
Yeah, so on a VAT return, if you got returns on a VAT return, obviously that's going to come through on the Amazon report. So it's going to be offset. So you're going to have your sales at X minus your returns at Y, and that's going to force out the figure of what your actual sales are for that quarter. So that takes up your returns. Now, when it comes to expired and faulty stock and anything that you're writing off, any bad buys, etc., you don't necessarily do that on a VAT return. So you're still going to claim the expense during that quarter because you've paid for it. So it's going to be a purchase. It's going to be a purchase expense. You'll claim the VAT back if you pay VAT back on it. Now, it gets altered at the end of the year. So when you come to do your stock take at the end of the year for your final accounts, any stock that you're holding, which is classed as sellable, comes out of your P&L and then goes and sits on your balance sheet as an asset. Then anything that is written off goes back from the stock onto your P&L as an expense. So then it gets expensed within your P&L. So it's kind of dealt with at year end, and you wouldn't really deal with written off stock on VAT quarters.
Yeah, I guess that makes sense because you're not actually selling it, so there's no VAT on sale to declare because it's faulty, right? So yeah,
that's
okay,
right.
That makes sense. Awesome. Hopefully that helps, Angela. Hey to Lucas just tuned in. Harminder asks, do the VAT receipts need to be in company name, or is it okay just to be in personal name? I'm thinking a lot of retailers might be unhappy providing receipts in company name.
Okay, so this is quite simple to explain. That if you've got a limited company and you're the director, then you're allowed to have expenses. So you could imagine going to the shop to buy a pint of milk for the office. You'd pay for it out of your own money, you'd come back and the company would give it you back. And it's exactly the same principle from an expense. So as a director or an employee, you can go to Tesco's, you can spend 400 or 500 quid on toys, and then you can come back to the office, and then the company could then reimburse you for that expense. It's a legitimate business expense if you're an employee or a director of the company. Now, and that's using your own card as well. So like I always go back to this, don't use Granny's card as an expense, because it's going to be in her name and it's going to be harder to track. So it needs to be in an employee's name or a director's name.
Awesome. Appreciate that. Hopefully that clears it up for you there, Harminder. Cool. Ruben, I think this one's for me. Ruben said you mentioned you have a sheet for written off stock. I do. He asked, is it something you pull a report from Sales Central, or is that you updating it manually? So if I explain better, this sheet is for stuff. It's not necessarily anything to do with Amazon. It's stuff that potentially we've received back from Amazon that we're writing off returns. But in general, it's well, not in general, but a lot of it is like, for example, say we purchased something from a store. It's not arrived at the store, or it's arrived damaged. Let's use one example. It's arrived damaged from the store. The store have said, don't bother, you don't need to send it back to us. You can just sort of keep that. Actually, that's a bad example because then I would have refunded you. But let's say you order some stock, it's not delivered. They say it has been delivered. Oh, expired's a good one. I'm kind of going around in circles trying to think of an easy example. We'll go with expired. So you order some stock. It's you don't sell it. It's expired. You can then add that to your stock written off. You disposed of it in whatever way. You're not going to sell it. You'd add that to your stock written off, and you can expense that, as opposed to it just being money out your account. You're still going to lose money of it, but obviously not as much, because it's going to reduce your sort of taxable profit amount. Is that correct, Mark?
Yeah, that's right. So yeah, so it's just your stock that you're holding at the end of the year, so at your year end, and it gets taken out of your P&L. It gets put in your asset, but because it's written off, we then take that proportion and put it back into your P&L. So we're claiming for the expense of the written off stock.
Yeah. So it's not often sort of Ruben, but we don't have, like, the stock written off sheet is a small thing. In general, I just have notes for the sort of bookkeeping team. So when we're sending off, we do our stuff sort of quarterly, and I just send some notes. So for example, if we've had even things like orders that haven't come through, which I know this is a common thing, you say you order 10 items from an arbitrage store, your prep center have said, or you've said, no, we haven't received it. You've gone back to the store, you're adamant you haven't received it, they're refusing to do anything. It's a bit of a tough one there. Usually we can get reimbursed for that or get replacement stock, but some stores don't do that. So every so often you might then have, say for example, £100 has gone at your account, you've got nothing to show for it. I just add that into my notes for the bookkeeping team, so they know, and I let them deal with it. I don't know what the sort of correct the accounts then on the back end are, but it's just those things where we just add those notes. So I don't know, Mark, if there's any better process there, or if that's sort of what you'd recommend.
Yeah, that's yeah. You can do it that way. Another way that some of our clients do that is you can go into Amazon, and you go into fulfillment by Amazon. Left hand side, you'll see the inventory tab at the top. I think you've probably got to click show more or see more. And when you click that, if you look down the list, you'll see something that says daily inventory history. Just click on that, and then you'll be able to view online, but you'll be able to download as well. So go to the download section. Then you'll be able to set the dates as custom. Now, if your period end is 31st of May 2021, you'd write the start date as 31st of May 2021. You'd write the end date as 31st of May 2021, and that will give you a snapshot of all your stock in Amazon that you're selling as FBA on that particular date. And within that list, you will see where it says customer damage, warehouse damage, expired, unsellable. So then you can start with that report to start getting your written off stock together for your year-end accounts. Now, that doesn't take into account the stuff that you've still got in your car boot, or the returns you've had that are damaged, etc., etc. So once you've got the list and the report from Amazon, then just add on to that with all the stuff that you've got damaged at home and you've got damage lying around, and then that will give you your written off stock for the end of the year report.
Awesome. There you go. Much appreciated. And Harminder and Ruben both saying thank you there. No worries, guys. Cool. So we'll just touch on this briefly. I mean, selling into Europe. So you're a typical sort of arbitrage UK limited company selling into Europe. If we keep it to Amazon, what are the sort of considerations people need to do? Or what would you advise someone who's thinking about that option?
Okay, so if you're just starting out on Amazon, obviously just stick with the UK, learn the UK, learn your metrics, learn what works for you, what model you want to run. And then as you're expanding, there's kind of two ways that you can go with Amazon. So you can go pan-EU, which means that your stock will be stored all over Europe. And then you have to register for VAT within Europe, and then you have to submit the VAT returns for all those sales across Europe. And that could be anywhere up to 70, 75 VAT returns any 1 year, because some countries you have to submit monthly returns, and some other countries you have to actually walk in with a piece of paper and hand it over at a desk. So you need what's classed as fiscal representation within those countries. So we always advise our clients to go down the route of look through your Seller Central, and you might find something that says, do you want to sell in Europe? Do you want to go pan-EU? And Amazon will quite often offer you the first year free on that, and on that side of registering and submitting all those accounts. Now that's going to give you a year to work out if pan-EU works for you in your business model, and Amazon are going to pay it for you. And just to give you an example, it's normally about €5,500 for pan-EU registration and for all those tax returns, or all those VAT returns in all the different countries. So it's quite a good way just to see if it's going to work. And we always advise people to go down that road, because obviously Amazon want to pay for it for the first year, so it's free. Another thing that you can do is there used to be what was called the EFN, which everybody loved, because Germany was the second biggest market in Amazon, and a lot of our sellers were 20-25% of their total sales were generated in Germany, and the rest, up to like 10%, was generated across Spain, France, and Italy. Obviously, they've added more countries into that now, so you've got Poland, Belgium, Sweden, Netherlands, etc., etc. But what's happening on the 1st of July is the EU are harmonising VAT regulations across Europe. So they're getting rid of the £22. That's being brought into €150. So it's about 130, 135 quid again. And what that's going to allow you to do is Amazon will become the responsible person for the VAT collection and distributing that VAT to any European sales that you have. So it's kind of like opening up EFN again under a slightly different model. We think it's going to be quite good and lucrative, because we do know a lot of people missed out, like I said, missed out about 30% of the sales when they ended EFN. Also, if you're doing merchant fulfilled, you can sign up with Royal Mail, Parcel Force, and they're going to be responsible again for collecting VAT. So you can effectively sell back into Europe. Royal Mail, Parcel Force, and Amazon, or eBay, if you're doing eBay, will collect the VAT for you, and they'll distribute that around Europe. So it's kind of opening, like I say, it's kind of opening up that ESM model again. You need to bear in mind that some items will fall under the CE marking. We don't have that in the UK anymore. It's changed on January the 1st, 2021 to the UKCA. So anybody that's selling into the UK from Europe have had to fulfill the requirements of the UKCA, which basically means that some goods, normally electronic, manufactured, engineering, tools, toys, they had to carry a stamp saying that it was safe. There was a safe product, and they'd conformed to European standards. So just make sure that if you're selling toys into Europe, or you want to sell toys into Europe, from the middle of July, I think it's the 16th of July or 17th of July, around that date, you then have to fill out a DOC. which is a declaration of conformity to who is the responsible person for the CE marking. So that might stop you then doing the new EFN model within Europe. So what we found from most of our sellers and all of the people we have on our books is food stuff and food items are a fantastic model for Europe, because Germans love to buy tomato ketchup and daddy sauce and Hellmann's mayo, etc., because they don't kind of have those in Germany. So that was always good. And obviously foodstuffs and health and beauty stuffs don't fall under the CE marking. So that could be a way in for people to sell back into Europe again.
That's awesome. Yeah, really exciting opportunity. I haven't heard much about that. So
there's not many people talking. There's not many people talking about it, to be honest with you, and it's something that's coming quite soon. And we believe it's gonna open up again. And as soon as Amazon settle into the pattern of it's called the IOSS, which is the Import One-Stop Shop, which is the EU are introducing. So what they're trying to do is it was an unlevel playing field because of China shipping goods into Europe, and they was declaring that those goods was under £22, €30, but really there was probably €100, €50, etc. So there was a lot of VAT fraud and duty fraud going off from China. So what they've done is they've harmonised it for everybody across Europe, and it's going to, but it then opens up for UK again to go in, because the marketplaces for FBA will be responsible for collecting the VAT, and if you're doing merchant fulfilled, then Royal Mail can be responsible for collecting the VAT.
Awesome. And I know we're mainly UK based here, and I don't know what your sort of knowledge of the US is, but if you are familiar, would that sort of be similar to how Amazon collects the sales taxes in the US? Is it sort of be a similar model to that?
Yes, exactly. So
Cool.
within the world of Seller Central, there's certain reports that we pull, and on those reports there's some new tabs that have appeared, and one of them is marketplace facilitation, and within that it's showing you who's responsible for the taxes. So what you're saying is correct. If you're selling into America, Amazon will collect sales taxes within those jurisdictions where you've sold, and they will pay out those sales taxes as whatever those percentages are. But then also there's obviously the general tax. So you've got sales taxes, which Amazon will collect, but all your sales that you've made, you can then bring them back to the UK and you can get them taxed under your own limited company. So you can get them taxed under your CT600 or your SA100. Now you just have to fill a form out in Seller Central to declare that you're going to bring all your profits back to the UK and get them taxed here. So it's two different taxes when you're looking at the world of the US. There's sales tax, and then there's obviously your normal your general tax from making profits.
Awesome. No, very, very useful. And one thing I should have mentioned at the start, but Eamon, who is one of the coaches here at iGen Entrepreneur, has offered to do 4 sort of 15 to 20 minute coaching sessions, and we've decided to give those to the 4 sort of, it's going to be a bit difficult one, the 4 sort of best questions at the end. So we have got about 15 minutes left. We do need to get finished by 8. So if you do have any questions, if that's any of incentive, do get those in for each of the 20-minute coaching call with Eamon for people. Hopefully we don't see too many questions flying in now, because it is coming towards the end. Yeah, I'm not really going to touch into this, because ultimately I don't really care too much about things I can't control and that don't really ultimately affect me. But if you want to touch on it, Mark, you're more than welcome. And maybe I'm misunderstanding Ollie, so let me know. But Ollie, that's how you pronounce his name. If it's not, I apologize. Says, why does a little FBA seller pay taxes in Europe when Amazon does not?
There's different thoughts on this. I mean, at the end of the day, Amazon probably employ a few million people around Europe, and they'll be paying some sort of tax, whether that's PAYE, national insurance, etc. So they will be paying into the tax system. But I understand people's frustrations that they're allowed to move money across borders to be tax efficient. They're not breaking any laws. They're just being tax efficient and they're just applying the law. So I know it's not always fair, but they're applying the law that the countries that they're working in have said this is the law. So that's just the way it is, really.
Cool. Thank you for answering that one. 3 more I've just pinged in. So Luca has asked to follow up to that potential new sort of EFN type model. Luca's asking, what about customs? So Luca's understanding is that the main hurdle Amazon could not overcome is customs. The paperwork involved made it almost impossible for OA sellers to keep selling in the EU. Has anything changed there?
Yes. So customs declarations won't be required if the value is under 150 euros and it's not tobacco or alcohol, which are controlled by duty. So there's certain categories that have duty attached to them. So you just need to make yourself aware of what those are. They might be some kind of dangerous substances, tobacco, alcohol, and anything over 150 euros. Then they'll have to go through the normal customs route. Okay.
Yeah, I think it's going to be really interesting. I mean, I'm just thinking of 2 potential things like, for example, assuming they're going to be something you can toggle on and off. So, having items that you probably keep it under that threshold and you sort of manage that, but that's going to be something to tackle when it arrives. I'm sure there'll be something in Amazon there, but it sounds very exciting. As you mentioned, Mark, it does make up a fair percent of sales for a large seller, or it did rather.
It did, yes.
Doesn't anymore there. Cool. My question on that wouldn't be, what was it? Because I know previously you had the distance selling thresholds. Now, what's the effect there? Is that still going to be the case? Like, is there still limitations there?
Yes. So the distance selling thresholds used to be varied across the EU. Most Germany, the Netherlands, and one other country that just came to mind was 100,000 euros, or effectively 100,000 euros, and then some other countries were 35,000 euros. So what they've done is they've lowered that to 10,000 euros.
Okay.
And that's if you're doing that yourself. Now, the distance selling threshold does not apply if you're using the IOSS and Amazon are facilitating the sale for you, because they're becoming responsible.
Awesome. Yeah, it's great it's personally great for myself anyway, because I know pretty much as the EFN was sort of scrapped, I was right on the borderline of the French threshold, for example. Germany, as you mentioned, was quite a generous one. That's great. Cool. Okay, so I've scrolled too far there. So Ruben's also following on from that IOSS. Will Amazon still allow EFN fulfillment across border, or do you have to register for VAT in those countries you wish to sell and also store your inventory there? So I mean, I think you've answered that it's basically like the EFN, you can just store in the UK, you don't have to register for VAT there. Is that correct?
That's correct, yeah. So you're not registered for VAT in any of the countries. You're not going to be storing products in any of the countries. Amazon, the thinking behind the IOSS is you are selling your product to Amazon before it leaves the UK. Then Amazon become the owner of that product, and then they're passing that on and then they're selling that on to the end user in whatever country they are. Because they're registered for VAT, they're part of the iOS scheme, they're the IOSS holder, they're the ones that are responsible for all the VAT, all the cross-border transactions, and all the paperwork that goes with it. Now they're simplifying it so it's all done digitally. Like I say, keep it under 150 euros, make sure it's not CE certified, and then you should be all good to go. One thing I do need to mention is, obviously, you've still got your returns. So Amazon will not be responsible for your returns as we are at the minute. Now, if they reintroduce this a few months down the line, because they're seeing that this model is picking up and they're making good money out of it again, they might take care of the returns again for you. You've either got to make a choice to stick with products that you're buying for a quid from Ocado, which is foodstuffs. And then if you do get them returned, just write them off and get a disposal order done within those countries.
Awesome. Appreciate that. Didn't realize that for returns. That's really useful. As always, Mark, much appreciated. Aminda's got an interesting question. Not something I'm aware of, but does seem quite exciting. Aminda asks, is it possible to still get an electric car from your own company? If yes, is it worth it?
Yes, you can do. Company can buy any car, really. So it's working out what works for you. At the minute, there's some really good incentives from HMRC for companies purchasing electric vehicles. Normally you're taxed at about 18% or 20% if it's standard CO2s on a normal petrol vehicle. There's obviously a surcharge for diesel vehicles. And then if you've got the fuel that the company's paying for again, there's then a surcharge of 18% of 12,400 quid that you've got to pay in tax. All this gets added to your personal income, then you're taxed and you pay national insurance on that at the end of the day. So it can become quite expensive. Currently, there's an incentive on like Teslas and cars like that where you're only paying 5%, which makes it quite lucrative. And then obviously the company's got the asset, the company can depreciate that asset normally, and then obviously you're only paying 5%.
Okay, cool. I mean, like, I don't want to get into too much detail, but what, say in my situation, because I don't do any RA, what do you need to, I suppose you have to justify it. So could someone in my position just take advantage of that scheme? And
yeah, definitely. You don't have to justify why you're buying a vehicle for your car, for your business. You're buying one because you want to, and then you're taking the tax responsibilities on what they are set out by HMRC.
Awesome. Much appreciated. There, interesting one. Cool. So I'll be looking into. All right. Okay, we've got about just under 10 minutes left. So Ruben said we're all on Q4. Yep, I'm excited as well, especially if Europe's back in the game. Ollie mentioned, you got a thumbs up for the previous one, so thanks for that, Mark. And then he's also followed up with, at what point does it make sense to switch from civil law association to LTD? I think Ollie's based in Germany potentially, so I don't know. I'm not familiar with what even is a civil law association.
Yeah, me neither, to be honest with you. If it means like a sole trade or you're trading personally, then I guess right at the outset, if you mean for Amazon to become your main income source and you're going to take it seriously, you're going to scale it and you want to grow it quickly, then just start a limited company right from the beginning. Now, if it's going to be a side hustle where you're in full-time employment, you've got a few hours, you just want to earn an holiday out of it, then just keep it as a sole trader activity. Cool. But it's hard to tell when somebody should do it because everybody's taxed differently. So some people are already 40% taxpayers, some people are 20% taxpayers, some people don't pay any tax. So it's different. It's different to each individual circumstance.
Awesome, much appreciated. There, Mark. As you said, that's the difficult with these is that Mark can sit here and give general sort of advice or thoughts. I can do the same, but everyone's situation is unique ultimately, and we do have to kind of focus on the majority of people. So we kind of position our answers in general as if it is someone we're talking to based sort of UK companies there. But hopefully that helps, Ollie. Okay, read last one because I've got a couple of things to mention before we wrap up. Harminder asks, if a high percentage of your sales are 0% VAT items, would you receive money back from HMRC every quarter? Would they allow this? I'm pretty sure I know the answer, but I'll let you tackle it just to make sure.
Yeah, when you're registering for VAT, you have to fill out certain criteria on whether you think you're going to be receiving a fee refund from HMRC every quarter. And if you tick yes in that box, then they could actually refuse you to be VAT registered. If your whole business is 0%, so you're buying 0%, you're selling 0%, they could refuse you VAT registration, and everything would then just go through gross, through corporation tax, and then it would be worked out on corporation tax sort of thing. But If you're mixing in 0% and 20%, then you could receive a refund. It all depends how much you're buying, to how much your sales are, etc. And it does work out quite lucrative for some people. So yeah, it's just about the mix of what your percentage is from 0% to 5% to 20%.
Awesome. Appreciate that. Cool. So we've got about 5 minutes left. We didn't really tackle, it's not so much an accounting thing. I did have it here to come to if we had time. But one big thing for me, and we'll get Mark's comments on it in a minute, is the difficulty with arbitrage in knowing your numbers, and linked to that, the differences between sort of cash flow and accruals accounting. And what I mean by that is, say, for example, if you're using a prep center, you might pay, well, you will pay for your items in general before they sell. You pay that bill, and you're also paying your prep on items, even if they don't go on to sell. You know, you're paying that up front. So you might use like Seller Toolkit or Seller Board, and you see your gross profit potentially if you got it set up correctly on your sales, but that's not accounting for everything else. It's not accounting for any items that you've missed. Say, for example, you buy something, it's not delivered, and you haven't got a refund. It's not accounting for that. It's not accounting for your stock that you've written off, all these kind of things. So I wanted to get just very quickly your potentially maybe like a top tip there, Mark, or your thoughts. What would you say to people who want to, you know, kind of look into those things and knowing the numbers and just kind of compare and, you know, the cash flow versus accruals accounting? Is it something that, I mean, from my understanding, we try and get like quarterly P&L and sort of balances prepared so we can kind of do that reconciliation between sort of what Seller Toolkit's saying and what you know, the balance sheets are sort of saying. Is that something you'd recommend?
Yeah, I mean, we don't do management accounting. We're more financial accountants. So we work for your compliance base. So we make sure that everything's being done legally from the point of view of HMRC, Companies House, etc. With softwares out there like Seller Board and Seller Toolkit, I'd just like to say that they're only going to be accurate if you keep them accurate. Mm-hmm. And you might find that some of the details, some of the reports that they're pulling from Amazon might have misleading information in there. They might be reading that data slightly wrong. So don't go 100% by those softwares. Now you're going to get a pretty good indication of where your business is going to be, but don't rely on that to what I call penny perfect, which is where you want to be. So I'll come back to the best way of looking at it is I try and get people to, in their early days, work on line by line, ASIN by ASIN basis. So if you brought something for £1, and then you know what the fees are, and then you know what the profit's going to be. If you can maintain that, then you're looking, and you know what the costs are. So you're not going to know an exact cost of what prep is, but you know if you're spending £100 a month and you're sending them 1,000 items, you know how much to apportion for the prep center per ASIN, per item. So just allow to start off with, allow a fixed figure for your prep, and then allow a fixed figure for your expenses. So just calculate up all your expenses, your softwares that you're using, an accountant if you've got an accountant, etc. And then just go, right, we're doing 1,000 sales. We're doing 1,000 sales per month, or my fees are £1,000. Then I know I've got to allow £1 for my expenses in my calculation. So then just work out that you brought it for £1, Amazon, and you're selling it for £5. You know Amazon is to take 30% of that. They'll take £1.50. Then you know that you've got £2.50 left within there. So if your expenses are all then £1, you know you've got £1.50 out of the £5. So if you do it just on that basis to start off with, so you're looking at your line entries and learning that, then as you grow and as you scale, then you'll know and you'll refine your numbers better, and then you'll be able to see instantly where the bad buys are, because you'll know that they're not returning the margin that you want. They're not returning the ROI that you want.
Awesome. Top stuff, Mark. Much appreciated. Just while we wrap it up there, a couple of things, or 3 things I wanted to mention. I did a post about it in the group. I do currently have, every so often I run a small group coaching intensive. So like a 1 to 4 this time round. I did a post on that that's really only if you sort of at that sort of stage where you are VAT registered or looking to get to that stage. We really do go deep on those sort of numbers, that kind of things we touched on. If you want to find out more about passive tax, I'm going to post the links. I'm posting a link to 3 things here. Put a link to that post, link to passive tax run by Mark, and then thirdly, we do also offer a few strategy calls per month. So for those here, your numbers, especially if you're sort of starting out or you want to touch on that on these calls, we look to where you're at, where you want to get to, build a bit of a plan there. Then if you want to go and work on that yourself, you can go and take that plan away. If you think it's all a bunch of crap and you decide on an arbitrage for you, that's fine as well. Or if you do want to jump in and work with us, we do have a paid training available there that should be of benefit regardless. So those are 3 things I wanted to mention. Lastly, just wanted to give a massive thanks to Mark because I think that's hugely beneficial. I'm definitely excited after hearing about that sort of EFN potentially coming out. And yeah, thank you very much, Mark. Is there anything you wanted to say?
Yeah, I just want to say if anybody that's listening's got any more questions, and we've only scratched on the surface for them, and they've not got a full understanding of what I've tried to get across in the answers, I do offer a free 15-minute call. So if they reach out to us through your link, and then we can just then set them up, and they can have a free 15-minute call with me. We can do it video, we can do it a phone call, however, and they can ask me questions.
Awesome. That's great stuff. So yeah, if you use that link there that I've dropped in, it's in the description of this stream and it's in that comment there. Let me see if I can click show. So it's obvious. There you go. Got those links there. If you use that, book in a 15-minute call with Mark there. Awesome. Thank you very much, Mark. Thank you everyone for your time. Bunch of thanks there in the comments. So it looks like guys watching and ladies watching have found it useful as well. Cheers all.
Okay, thanks a lot.